Welcome to the Beryl Consulting Group's 2024 Recap, Part 3. Let's continue our analysis with the remaining charts and their broader implications. First, let's look at big tech valuations. The forward price-to-sales ratio for the Mega Cap 8 has reached 7.8, surpassing the pre-2022 bear market levels and aligning with the peak of the 2000 dot-com bubble. This serves as a red flag for tech investors. The next chart is about the commercial real estate delinquencies spike. Office CMBS delinquencies have surged to 10.2%, the highest in 11 years, outpacing the 2008 crisis. Regional banks are particularly exposed to this growing risk. The next chart is about the housing affordability at record low. The annual income required to purchase a home has hit $109,000, double the level from 4 years ago, while the median income is about $83,000. This affordability gap represents a significant challenge for the housing market. Now more on China. During the 2007 and 2008 financial crisis, China's strong growth, savings, and healthy economy positioned it as a global stabilizer. Today, however, a struggling economy leaves the U.S. to face potential downturns alone, compounded by the persistently high interest rates and a higher-for-longer policy, posing significant risks to the U.S. banking sector, particularly regional banks. This is a chart about China's bond yield, and is truly historic. China's 30-year government bond yield has dropped below Japan's 30-year yield for the first time ever. Over the last 4 years, China's bond yield has declined by 215 basis points. This comes as China's economy has slowed and experienced 6 straight quarters of deflation, the longest streak since 1999. In the past, Japan has seen 3 decades of economic stagnation and has suffered 25 years of deflation starting in the 1990s. Since 2021, China's real estate crisis has erased $18 trillion in household wealth, compared to $11 trillion lost in the US during the 2008 crisis. Total borrowing by China's government, households, and corporations now approaches 300% of GDP, surpassing the US by 40 percentage points. Some questions we can ask ourselves are, could the housing affordability crisis spark broader economic instability in 2025? Will the Magnificent Seven continue to sustain global equity markets? Is China entering a Japanification phase, marked by economic stagnation and prolonged deflation? These trends highlight escalating challenges in the US and global economies. In 2025, strategic foresight will be essential for both investors and consumers. On behalf of the Beryl Consulting Group, I'm Jessy Wang.